All right, next question. Next question I'm asking pertaining to a vacation home. So this is the facts. Determine the net income or net loss if Ophelia rented the property that was used as personal use for 20 days and was rented for 30 days using the U.S. tax court method. And then I gave you information regarding the activity. So the rental income is $3,500, interest and taxes $2,000, depreciation $5,000, and other expenses $1,000. So the first thing we got to determine if the personal days is greater than 10% of rental days, right? And if personal days is greater than 14. So personal days, what do we have for personal days? 20, right? 20
is more than 14.
So we got 20 is more than 3, right? Is 20 more than 14? Yeah. The test is if personal days is greater than 10% of rental days. So personal days, 20 is greater than 10% of rental days. My rental days is 30, 10% of that is 3, right? My personal days is 20. Is 20 greater than 14?
Yes.
Yeah, so what do we have? So both of these, yeah, vacation home. Now regarding the vacation home, regarding the vacation home, how do we allocate the expenses? So we have vacation, right? Now regarding the vacation home, again, I want to put deduction for AGI, just so you know. And then over here I have personal. Whatever's not allocated to the vacation home is personal. So then I'm going to put another column. This is tax treatment for personal. So what happened, I'm going to allocate a certain portion in this category, in this column. Whatever I don't allocate here goes in here, right? And then I'm going to tell you what are these items for. So what's first? Rental income, right? So first we have to put the rental income, $3,500. And you're right, the first group, we have interest and taxes, right? Interest and taxes, what do we have? $3,000, right? Now, under the tax court method,
No, it's 2,000.
2,000. Can't do that. So interest and taxes is 2,000. So under the tax court method, what is the ratio that I would use to allocate to the vacation home?
30.
The 30, which represents the days rented, right? So 30, which represents the days rented, that would be my top number. What's my bottom number? 365. So my ratio is days rented, which is 30, over 365. So 2,000 times 30 over 365, what does that give me?
164.38.
Yeah, rounding to the nearest dollar, 164. So of the $2,000, if I'm allocating 164 for the vacation home, how much am I allocating for personal?
1,836.
Correct, 1,836. So again, of the 2,000, I'm allocating 164 to the vacation home and 1,836 for personal. How is that treated for personal? Yeah, itemized. It goes on Schedule A, so it's an itemized deduction, which makes it a from AGI deduction. So deduction from AGI. Okay, the next step, we take 3,500, which represents the rental income from the vacation home, minus 164. What do we get? I got
600.
3,336.
Yeah.
Right?
Yes.
3,336. So we have enough to apply the next category of expenses. What's the next category?
Utility.
Depreciation.
Other expenses.
Not depreciation. Other. Before depreciation, we take other expenses. Other expenses, which includes your insurance, your utilities, other operating expenses. That's not interest and taxes, and that's not depreciation. So we got 1,000. Now, what is my ratio that I use for other expenses? So the ratio that I would use for category 2 and category 3 would be the days rented would be my top number. And what would be my bottom number? Total days used. So I got 30 over 50, right? So 1,000 over 30 over 50, what does that give me?
600.
600, right? So of the $1,000, if I'm allocating 600 to the vacation home, how much am I allocating to the personal?
400.
400. How do we treat that?
Not deductible.
Yeah, not deductible. Not deductible. Remember, you cannot deduct your utilities on your personal residence. You cannot deduct the insurance on your personal residence. So the same rule applies here. So now we take 3,336, which was the subtotal from 2,500 minus 164. So that's my subtotal. I subtract 600, right? I subtract 600, what do I get?
1,734, 36.
Yeah, I got 2,736. The last category of expenses, we have depreciation. Depreciation, we have
5,000.
5,000. What is my ratio?
30 over 50.
Yeah, same as the second category, which is the days rented over total used days, right? So 30 over 50, what do we get?
3,000.
We got 3,000. But let's hold off on that
But we only have
computation.
27.
But first, correct, we're only going to use 2736. But before we get to that step, we're allocating, of the $5,000, we're allocating 3,000 here, right? To the vacation home. How much is allocated to the personal? 2,000, right? And how's that treated?
Not deductible.
Yeah, not deductible. Remember, you cannot deduct the depreciation on the personal portion of your home or the personal portion of your automobiles. That's not deductible. So we're allocating 3,000 here and 2,000 over there. But what's the first rule regarding vacation homes? You cannot get a negative number. You cannot generate a net loss. So it's limited to 2736, right? So net income is 0.
Doesn't that carry over to the next year possibly?
That was my next question. So what happens to the remainder amount? So again, they're only using 2,736 of the $3,000. How much do I carry over?
265.
264, right? So you're going to carry over, correct, 264 to the next period. And the same, you're going to apply the same equation, the same ratio. But whatever you don't use in whatever category gets carried over to the next year. And you're going to apply them to the same classification.